everyone, this is Matthew Cruz, and I'll be sharing with you the March supply demand report that came out from the USDA this morning at 11 a.m. Futures trading does involve risk. I'll let you read through that. So starting with the U.S. grain ending stocks, corn production came in at 1.44 billion bushels. So 100 million bushel reduction from last month, 1.54, a little bit below what the trade was looking for, 1.479. Last year at this time we're at 1.23, so a little bit more than last year, but starting to go in the right direction now. Soybeans came in at 285 million bushels, fairly close what the average trade was looking for at 278, but down from last month's at 325. Wheat came in a little bit higher end of the range at 653 million bushels. Average trade was looking more towards 628, and compare that to last month, 648 million bushels. Looking at global production, they did lower Brazil's soybean crop from 134 million metric tons last month to 127 million metric tons. That is not a huge surprise. Actually, trade was looking for 129 million metric tons. They were expecting it to come in lower. They did come in lower, but I still think that you're going to see this number continue to shift lower yet in the coming months. Probably won't get more of an accurate depiction of what's going on in Brazil from the USDA until closer to May. Looking at corn, came in at 114, pretty much left that unchanged from last month. We're still in the early stages. They're just finishing planting the safrinha corn crop in Brazil. So we have a lot of season yet to go for the bulk of their corn crop. So Argentine soybeans came in at 43.5, pretty close to what the average trade was looking for. They reduced that by 1.5 million metric tons from last month. The corn came in at 53. Average trade was looking more towards 52. They did shave off 1 million metric ton. I think you'll continue to see both of these numbers can gradually shift lower in the coming months as well, similar to what you'll see in the soybeans. Do want to point out that the USDA did update some numbers from the Russian corn and wheat exports and the Ukraine corn and wheat exports. You can see here that in the case of the Russian wheat, they reduced the wheat exports by 3 million metric tons from last month, and in Ukraine was reduced by 4 million metric tons. So 7 million metric tons already from last month that they're reducing those grain exports, and that's kind of shot in the dark at this point. More than likely, the longer this war continues, more than likely you'll see that those numbers kind of drift lower in terms of their exports. And you kind of also see their ending stocks are then are drifting higher because they're not going anywhere. So you can also see in the case of, they did leave the Russian corn the same, although it's not a huge player in the corn market, but in the case of the Ukraine corn, they did reduce those corn exports from 33.5 to 27.5. So somebody else has to pick that up in the global market. So either Brazil and the United States are the obvious people to kind of fill that export gap. Quickly looking at global ending stocks, corn came in at 301, right on what the average trade was looking for, shaved off about 1.2 million metric tons from last month. Soybeans came in right at 90, pretty close. There's a little bit of a typo there. It should be 89.5. So fairly close what the average trade was looking for, down 2.8 million metric tons from last month. Wheat at 281.5 came in higher compared to what the last month was at 278, and a little bit higher than what the average trade was looking for. So fairly positive news in both the corn and beans, and slightly negative in the case of the wheat. Kind of breaking it down, looking at the corn balance sheet, so we can see what changes were made. Primarily, they increased ethanol consumption by 25 million bushels, and they increased exports by 75 million bushels. So you can already kind of see the impact of what's going on in Russia and Ukraine in today's reports. And so adding, I think that's where a lot of those exports are coming from. And so adding that 100 million bushels to exports and ethanol consumption, we reduce our ending stocks by that much from 1.54 to 1.44 billion bushels, excuse me. So other than that, the last year's acres and yield were all left unchanged. Taking a look at soybeans, primarily they just increase exports by 40 million bushels. That's where we see our reduction here. There's a small change to the residual category here, but primarily they just increased our exports by 40 million bushels, and that's where we see that reduction from 325 down to 285 million bushels. In the case of the wheat, they reduced imports by 5 million and they increased exports by 10 million. So not a huge change, but overall that's how we add that 5 million bushels to our ending stocks. That took us from 648 to 653. So still pretty low ending stocks and historically. And I think that as time picks up, you're going to see these exports kind of take off in the case of the wheat and the corn. Looking at what the market's doing today, what it's done the last several months, this is not the close, but right at the moment, we're down about 15 cents in the May wheat. So the trade was kind of waiting for the report to come out. So it's looks like they're potentially beginning to develop another correction here. We've talked about in our report how this could be a classic case for a fourth wave correction, that this pattern here was the third wave, and we could potentially get a fourth wave correction. Now, it's difficult to identify what that bottom target would be. It's potentially could drop back to as low as $7. But we still do see another fifth wave, which would see us potentially go back higher and retest these highs at 7.75 in the May corn. Then the soybeans, we've kind of been trading sideways the last couple of days. You can see here, not a good sign when we left a tail to the upside last time we did that. There's a larger tail here that was done late February. So we're down right now, we're down 4. So we've been coming back a little bit. We were down, I think 15 at one point in the beans. And so, but we're looks like we're running into a lot of resistance here to the upside. And it's kind of similar situation in the corn. The soybeans haven't been quite as impacted by what's going on in the Russia-Ukraine situation. And so most of what we're paying attention to is the crop size in Brazil and Argentina and how big that's going to be. And we assume there will be further reductions in that crop size as time goes on in the USDA reports. Take a look at the wheat. This wheat's been on a wild ride here. I'm sure a lot of you have been following that. But you could see they had pretty much had 4 days that were up the limit here, starting from last week. You can see these 2 lines here that the market gapped open, limit up 2 times in a row in the last several days. And see now we're starting to cool off here in the market. At the moment, the market is limit down 85 cents. And so it's possible the market is overheated and it's really beginning to digest what's going on. A lot of people have been complaining about how we're getting into the point where we're just doing a lot of demand destruction and there's really no buyers. In the physical cash market is diverging from what's going on in the futures market. They're destroying the basis, lowering the basis to offset these gains in the futures market, and so it's possible that we could see more of that, but time will tell. So if you're a bull, obviously you're going to point to what's going on in Russia, Ukraine. Um, we don't know how long this war is going to last. The longer it lasts, the more that likely will help support prices. And so if this lasts 3 more months, I think you have a strong argument for um, prices being supported at these levels. And if the war were to end tomorrow, uh, I think you'll see a pretty quick correction in prices. You also point out that, with these prices, typically what you do is buy more acres, but we're pretty much at peak acres. And that's been something we've talked about a lot. There's really, we're maxed out on acres, basically. We can't go someplace and just go plant 10 more acres, 10 million more acres of corn, for example, in the United States without cannibalizing some other crop like soybeans or cotton or wheat, things like that. The U.S. economy appears to be slowly getting back opened up, and I think that'll be a help for more fuel consumption, ethanol consumption, overall food consumption, people going out to restaurants, things like that. If you're a bear, you're going to talk about the demand destruction taking place, that a lot of buyers simply aren't just going to pay these prices anymore. It's too much risk for them. You're going to see a lot of food inflation take place, and a lot of consumers are going to push back on that. The technicals are really oversold especially in the wheat, but the grain, the corn and beans too. You can point that they're very oversold, and you might be looking for more of a quick ending to the war as well. While the United States is maybe maxed out on acres, the rest of the world necessarily is not. And so I think when things like this happen, when we have these major bull rallies, what we find is that there's a lot of places in the world that we aren't used to paying attention to will begin to plant more acres. The places that historically haven't planted a lot of corn or beans or wheat suddenly say, hey, this looks attractive. Maybe we should start planting these crops too. And so, when you have wheat that's $4 or $5, places in Africa aren't going to be interested in that. But when you have wheat that's at $12, a lot of places around the world are saying, hey, this is worth us trying to plant this crop. And so and that's what you're seeing. Of course, Brazil is the obvious example of that. Brazil is going to look to plant a lot more soybeans the following year. I want to thank you for watching. If you have any questions, feel free to give us a call at 712-227-1110. Thank you and have a nice day.